Welcome to Markets Now. I'm Michelle Rook. We have mixed trade in both grain and livestock futures here as we roll through the early portion of this session. Grains were mostly lower to start with this morning. Soybeans have come back here just a bit in a few of the wheat contracts, but corn still under pressure. Last week, we saw fund liquidation and fund selling. We closed the December new crop contract below the 550 support area and kind of took out some other major support this morning, which would be the March lows. We're not only seeing pressure from a little bit better weather for planting, not that it's not going to be cold up in the north, but some of the other areas of the Midwest look like we could get some planting done this week. And you're also seeing, I think, pressure from China. Cancellation this morning of 13 million bushels in the old crop category. So that's weighing on old crop corn this morning. We're seeing some spread unwinding as well. And then we continue to see pressure here, I think, from Brazil's corn crop starting to undercut us in the market. July corn futures are down 7 1/4. The December contract is 3.5 lower. Soybeans, a little early pressure, but we're back up this morning as we are seeing the forward spreads work. You still have pretty good demand on the cash side of things and strong cash basis levels supporting the old crop part of the board here this morning, and you're seeing those forward spreads working again. So July is up 10 3/4, while the November is 4 better. We're also getting help from higher soybean meal and oil, with meal up 70 points and soybean oil up 11 points. Now, the market was down last week. We did have lower weekly closes and saw some fund liquidation here. The November contract took some of the brunt of that just because of this record Brazilian crop that is undercutting us in the market. China's been taking their business or taking sales from them. And so that may continue to be a bit of a headwind, especially as their prices are about $2 under the board right now. Over in the wheat complex, we did see some cold temperatures in HRW country over the weekend in parts of Nebraska into western Kansas. Not sure how much damage that did, but looks like the market might be putting in just a little bit of weather premium this morning in the Kansas City wheat. So we're up 4 1/4. Minneapolis wheat new crop September's up 8 1/4. Again, with some snow over the weekend, it looks like planting is continuing to be a difficult situation there. And we may see more PP acres as a result of that. So that market putting in a little premium, but Chicago wheat is lower, and we've been seeing these Chicago, Kansas City spreads continue to widen out here, and Chicago wheat's on the short side of that spread once again, down 3 1/4 cents this morning. Moving over to livestock, we've got hogs higher, cattle futures are lower. Cattle responding to the cattle on feed report, which came in a little bit bearish. That placements number was a little over 99%, which was above trade estimates. And so we saw an initial reaction to that this morning. The on-feed number is still down about 4.5% from last year. So that should still be somewhat supportive. And so the April contract is better, or has pushed back to the plus side, as we are seeing cash trade and the fact that the futures are at a discount to that cash continue to be supportive of that part of the market. But June's down 55 cents in the futures in the live cattle, and August down 68. Feeders are also lower, down 173 on the May, with August down 108. I also think we're seeing some cattle hog spread unwinding. So hogs are on the long side of that spread this morning, with cattle on the short side of that spread, but hogs seeing a little short covering bounce here after we had a lower week last week once again. Bouncing off contract lows. June is up 123. The July's up 123 as well. We do need to see that cash market bottom here before that market can really take off, though. That is a look at your markets. I'm Michelle Rook.